Hello and welcome to Credit Chat Live. Today we have the honor of welcoming a true expert in the world of business credit and finance. Known as the business credit guy, we have Drew Smith. And just to throw out a few of his titles, Drew is a small business owner, business credit expert, of course, a finance consultant, and a real estate investor with over 2 decades of experience helping small businesses globally secure funding. So, with that being said, we are so happy to have Drew here to share his insights on financial empowerment, finding creative funding strategies for business growth. So, I'm super excited for this, Drew, and thank you so much for being here.
Thank you very much, Destiny, and thank you, Rod, and all the listeners. It's such a pleasure to be here today. The particular topic we're talking about, I'm incredibly passionate about. I find that at least 90% of business owners all throughout the US and all 50 states truly don't understand this topic. It's something that is truly understood on Wall Street and in big businesses and corporate. But the truth of the matter is that we play by all the same rules that they do. It's just nobody ever took the time to be able to explain this in detail to a lot of Main Street business owners. And as somebody that likes to pride myself that I left the Wall Street corporate world and now down here working with Main Street, I'm really excited about a conversation. So I appreciate both of your time.
Awesome, Drew.
If you've been in
Please.
the business 2 decades, I have too. Why are you not all gray? That's not fair.
That's a wonderful question. Maybe because I'm normally in the sun. I grew up in Australia. I've lived in about 5 countries around the world, traveled to over 123, spent most of my time in California and now in the sunny shores of Sarasota down here in Florida. So maybe it's just a little bit of that sea air and vitamin B.
And I knew that accent didn't belong to a Texan, so that's where I am. But
Absolutely. Yeah. I spent a lot of time in Texas. I was there just last weekend, actually. And a big fan.
stop hijacking this, and we can talk about the subject at hand. Let's talk about business credit.
Absolutely.
Totally. Let's jump right in. I'll give you your first question, Drew. So, would you be able to
Sure.
explain the importance of establishing and maintaining good business credit, particularly for small businesses?
Yeah, absolutely. Thanks for the question. I think it's really just the lifeblood and the foundation for every business to be able to operate and grow. Unfortunately, most businesses aren't giving the option, of understanding, credit when they may be going to their traditional bank vendor or lender. And they seem to all follow the same path, which is what we call in the industry bootstrapping, which is basically using your own personal lines of credit, credit built around your social security, credit lines that you've built, personal savings, assets, to be able to set up and fund your business. But the truth is there's a better way. And if we can start to understand truly the power of business credit, not only will it benefit our business, not only will it be able to allow us to be able to flourish, but it's also going to separate our personal assets, and it's going to protect everything with our family. And I think that's the biggest takeaway that anyone can take away from this conversation is how do we truly understand why we set up our business structure in the beginning, and how do we avoid piercing the corporate veil of that protection on top of all of those advantages. So by understanding this, I think it's really going to open many people's eyes when it comes to truly understanding why they set up their business and how they continue to make it grow.
Definitely. And it's also crucial to understand that distinction between business credit and personal credit, and understanding really that it does not impede on your personal credit at all, and it could be really used as a valuable tool. What are some of the benefits of deciding to opt into using business credit?
Wonderful. Well, I think to answer that question, we just need to look at both sides of it. Because traditionally using our personal credit, which is built around our social security number, that is going to normally give us a score from somewhere from 350 to 850. The challenge with that type of credit, it was never built for businesses in the first place. And eventually we're going to run into a couple of problems. Number one, we're going to be limited to what we can borrow. So as our business grows and the more we use that credit, we seem to hit that 30% sort of magic number, and our credit scores seem to come back a little bit. And this seems to always be in line with our debt to income ratio. So people get frustrated, not only knowing that they can't continue to borrow in that way, but it's hurting their personal scores. Whenever we're using personal credit, we are personally guaranteeing that asset. Now, heaven forbid, I don't like to be a doomsday, but if we look at the facts, last year over 600,000 small businesses shut down, and 82% of that were because not of a bad business plan or a model, but because they couldn't access funds when they needed to run their business, to be able to weather a storm, or to be able to grow. By understanding that business credit is built around the EIN of your business, it starts to help us understand that our social security number was never our business's business in the first place. The EIN is the social security number of our business. So if a social security number can be able to build its own credit scores and credit reports and limits, then why not the EIN? So by able to take your everyday expenses that you already have in a small business and have it start to be reported to the main credit bureaus. Of course, we're talking about Experian Business, Equifax Business, and Dun & Bradstreet. That's going to allow our business to be able to lend and borrow. The amount of advantages that come to that is, of course, always having cash flow, whether it's payroll, whether it's overheads, whether it's material, through the up and down times of life, natural disasters. I know that all too well down here in Florida, the pandemic that happened, or even recessions. And by giving businesses the access to that unsecured instant credit to almost go to almost any bank or vendor or lender to be able to get that, that allows business to be able to not stagnate or go out of business, or risk their personal assets to be able to flourish sort of in that time. Another advantage of understanding business credit is the value that it creates to an individual business. If I have two identical businesses, let's say it was a plumber, for example, and one had a business line of $1 million, around their EIN number, and one didn't, one business is clearly more valuable. So if there's an exit strategy and plan, if there's a legacy passing it down to the children, we're really recession proofing, bulletproofing that business by having access to the funds on demand, but also more importantly, raising the value of that asset for ourselves or our family.
So, Drew, listening, I think in my mind, I'm taking notes because there are several things I think you touch on that are really important. I think the first, when you talk about credit reports, personal reports versus business reports, the need for access to capital for a business is different than for an individual. And in the sense of, as an individual, you apply for loans from time to time. You're buying a house, you're buying a car, getting a credit card. But that's not something that's consistent. With a business credit history, part of the benefit, if I understand you right, is it gives you the ability to access business resources that aren't typically provided to a consumer for things like payroll, things like equipment purchases that tend to be higher in terms of loan value and loan cost than you would typically see as an individual. And is that something you see, when we see, credit scores affected by utilization rates and by, the outstanding debt amounts, business debt can be much higher, much greater in some ways, especially as you're beginning to build a business. And am I right in understanding that's part of what you're saying is a business credit report lets you access perhaps greater amounts as necessary for payroll, for equipment, for those sorts of things, and your personal credit can stay personal, and you're not entirely reliant on your own personal report that could, something happens, both your business and your personal credit could be dragged down.
Yeah, you're 100%. It is, Rod. Yeah, thank you. It's a great question and a point to dive into a little bit more. So the more we use personal credit, the more it gets pulled back on us, as we touched in the beginning conversation. But with business credit, it's the complete opposite. There's no limits to what you can create on business credit. It's quicker, easier, faster to access business credit once the credit bureaus have received responsible use. And you could create 10 to 100 times on your business EIN line of credit than you ever could on your personal. And once we see that it doesn't necessarily take a lot of money, I don't need to spend a lot to build that. I just need to show constant and responsible use. For example, if I'm looking at a tier one business credit, there are 4 in total in business credit line, and it's simply putting gas in the car. and I have my favorite gas station. Now, if I'm just using personal credit or cash right now to be able to put the gas in the car, it's not registering in any way. By having an approved business line of credit, even if it was just a minimum of $50 at that gas station, every time now that you're putting gas in the car and paying the bill, the credit bureaus are now seeing a responsible use of credit, and they give you more and more and more. So when we realize, getting back to your question, it's easier, quicker, faster, we can build 10 to 100 times the limit, and we're able to access more by using credit responsibly. It's a complete game changer for a business.
And you mentioned
Fantastic.
score also. Yeah, and on an Experian business credit report, I think you touch on something else really important, that there are two different businesses within Experian. There's the consumer credit reporting business, and then there's the business credit reporting business, if you will, that,
Correct.
from an external perspective. And
Yes.
there are different scores too. Business credit score with Experian has its own business credit score. It's not a FICO score, and people confuse the two. And it's from 0 to 100. So some ways, but easier to understand, I think, than the 350 to 850. But where those scales come from, I don't know. But and it's based on the business behavior. And so your business score will reflect what you're doing with your business and how you're managing those financial relationships, as opposed to if you're financing with your personal credit, using your personal credit to underwrite business expense, the way you're purchasing with credit cards or buying a house, getting a mortgage, your personal mortgage could affect your business ability to conduct business.
Substantially.
Yeah.
Absolutely. And just touching on those business credit reports, if I may, very quickly, if we look at a personal report, we talked about, TransUnion and the type of, Experian, personal, and then we start to look at a business credit report. It's public information. So not only can the banks, the vendors and lenders, the big box, the online stores all view this, the car companies, so can your competitors, and so can your customers. And when we have a look at the two components of it, one is the score, which thank you so much for explaining rightly, from 0 to 100. You ideally want to be at an 80, or if we can simply put it, an 8 out of 10. By being at an 8 out of 10 with all the bureaus, that allows you to be access the most favorable terms, what you want, when you want, to be able to do that. You're 100% right when we have a look at a business credit report that there's two factors that we need to look at. One is the score, and one is going to be the approved limit. By having a 80 or more out of 100, or even simpler terms, an 8 out of 10, that's going to allow you to have access to the best credit, the most favorable terms, and the biggest choice, of those particular vendors, lenders, or stores that you want to work at. I guess if we were going to compare that to a personal score, so by having an 80 out of 100 or an 8 out of 10 on all the credit bureaus, that's going to allow us as business owners to access the best terms, most favorable terms, the companies that we want to use with. And of course, that's also going to be able to lift our approved credit limit higher. If I was to compare that to personal, although we don't like to do that too much, I suppose a 720 or above would be a good score where you could shop around and get favorable terms. An 80 or above on a business credit report, like an Experian business credit report, allows us to be able to have those terms to be able to do that. And you are right, it's a much simpler and easier rating system to be able to follow than when it comes to personal.
Oh, yeah. Let's pretend that we're reading Business Credit for Dummies, and I want to start a business and I don't have funds or capital or anything to put towards the business. So how exactly does your personal credit tie into receiving business credit, and how exactly do you secure business credit in the first place?
Yeah, that's a great question. So there is really a 7-part system to going on and building business credit. And the most important part starts with the foundation. There are over 125 points set out by the company LexisNexis to see if a company is fundable. But it starts with some of the very basic things that even unfortunately some businesses aren't doing today. So do I have firstly, the right structure? We have to have some sort of LLC. Now, the right entity, it could be set in an S Corp or a C Corp, it could be a non-profit, but as long as we have the LLC, that allows us to have the EIN number. And most likely, of course, it needs to be registered with the state. We have to have a business address. Definitely not a PO box. if we do have a PO box, our business doesn't look fundable. If we do have a home address, it is possible, but a physical or a virtual business address is going to allow us to get there better. We have to have a website. It's 2024. If you're still operating off Facebook or Craigslist, heaven forbid, you're not findable and you don't look fundable. And I think that's a great thing. If you're taking notes today, to be fundable, you've got to be findable. Here's a really popular one that I still come over about 40% of small businesses is they don't have the correct email address. Having I have a business at Gmail or Yahoo or heaven forbid, AOL, is not going to make you as fundable as having your domain name at info@ihaveabusiness.com. So these might sound like very basic things, but these are what the banks, the institutions, the lenders, the credit bureaus, and LexisNexis are judging a business on. And by going through and ticking off some of these really simple ones in the beginning, that's going to allow us to start establishing business credit. We want to do some of these things before we register with the credit bureaus, so all of the information is uniformed. A couple of others we can think about: a business telephone number. It's not expensive. There's many companies out there for maybe $7, $9, $12 a month. You can get a business phone number that rings to your cell phone. You don't have to get a separate line. Here's a really fun one. Do you remember or heard of still the telephone directory of 411?
I do.
Right.
Destiny probably doesn't.
Destiny, maybe not so much. Well, people, it's what people used to call, to be able to find out, business directories and phone numbers. And even though people don't even know that exists, that is a free way to register your business telephone with them. And one of those also, makes it, more fundable along the way. So to answer your question more specifically, Destiny, I could talk about this for hours. We want to start with a fundable company that is registered the right way, easy to find, got a website, got the right phone number, and got the email address. Then we can start registering with the credit bureaus. And once we've done that, we can start with tier 1 lending. Tier 1 lending, to me, are the small types of ringer accounts that we started with. Maybe it's just a fleet card at the local gas station. Maybe it's a small credit at companies like Uline or Granger, or maybe it's some local banks and credit unions. By having a small amount of credit line tied just to the EIN in that situation, using it responsibly, not spending a lot of money, but using it responsibly, shows that you're able to build credit. And then over time, just like with personal credit, but in a less period, you'll be graduated to tier 2, 3, 4, and so on. And once you're at that level, your business can pretty much do anything.
Wow. I'm just wondering how that progression goes from having a $500 credit limit from your local credit union to hundreds of thousands for Dummies.
Yeah, that's a great... No, not even for dummy. These are excellent questions, and this is exactly what I'm explaining sort of in most keynotes and speakers, webinars, and with small business organizations all over the country. I think that you nailed it in the very beginning. It's not difficult. It's just a little different, and the reason is everything, we're so accustomed to everything personal credit being automatic. For example, if I wanted to go down and get a local store card at Macy's, I don't need to pick up and call TransUnion and let them know, or Experian Personal and say, hey, I'm just taking out a store card now, and everything that I do, I'm going to buy this suit. I want to let you know I'm buying it. Everybody knows about it, right? So we're accustomed to that just happening naturally. We just have to be a little more intentional when it comes. So we need to be using vendors and lenders that report. The shocking information that most people don't understand is 93% of vendors, lenders, online stores, big box stores do not report to the credit bureaus. The reason is that the accounts are generally not set up the right way, or they have to pay for it. And if they have to pay any more money, why would they? By understanding how to set it up correctly and just using the EIN, as you pointed out, we start to be able to build trust. We don't have to necessarily ask for more money, credit limits, or better terms. It will naturally happen to us. And over a couple of months of using it and paying it back, all those credit limits are going to be put up and our score is just going to naturally increase. What could take years in personal credit could take 12, 9, or even 6 or less months to be able to do in business. So it's really about using it and paying it back. using it and paying it back. There are 4 tiers of credit lending, as I mentioned, and every time you responsibly use an account, then you're going to be naturally graduated or upgraded, if you will, to the top. So if we start in economy, we're going to finish in first class just by doing the daily activities that you're doing right now, just a little bit more intentionally. Does that answer your question?
100%. That makes a lot of sense. Thank you so much.
Yeah, no, we could just switch the conversation in, because what you said applies to personal credit too, largely. It's kind of the common sense stuff. It's you're doing the same thing. If you have a bill, you pay it on time, you pay it off. And over time, that credit history builds. And it's personal credit or business credit. What I always tell people, and I think it's true with business lenders as well as personal lenders, is they love people to be very boring. And they love businesses to be very boring. They just want to, if they make you a loan or they open a line for you, they want to see that you use it and they want to see that you pay it back as agreed. And if you're doing that, they don't like surprises. So if you're dull and boring, bankers love you. That's the whole secret to having a good relationship with a bank, I think, whether it's a business credit or personal credit. So good advice either way. Yeah.
Very much.
And I couldn't agree more. And once you're able to, it's a really good part, Rod, maybe being a little bit boring, in the beginning, but once it is set up, then it will start to naturally grow. Yeah. And, in certainly, with Jay Galt, we can take any business from the very bottom to the very top of this in record time, in under a year, which is unheard of. I meet businesses that have been around for 3-4 generations and they still haven't even ever heard of business credit, nor have a business credit report or score, because it was never explained. So after that initial first year, well, realistically, if you're carrying on business as normal, that's going to keep on climbing. It's going to keep on recession proofing, if you will, your business, bulletproofing your business, and make you unstoppable for future generations. And the average business that we come across has personally guaranteed throughout the life of their business somewhere around $82,000 of personal credit. Once again, don't like to be a doomsday, but should anything ever happen to your business, you are on the hook or line for that. So if we can shift it to the business, protect the business, that of course has a positive effect on our personal scores. It protects the house, it protects the 401k, the kids' college funds, your cars, your boats, your savings, whatever you have in your personal life. Because once again, your social security number is none of your business's business. It was never intended for that, and the more that we understand that as small businesses, the better we're going to be.
And you mentioned that, personal credit reports have very strict restrictions as to whom can access them and under what circumstances. They're not public for a personal report, but a business credit report, anyone can access. Do you advise businesses? One of the things that I've heard and I've said about our business credit reports is that as a small business, it's a great marketing tool. If you have a strong business credit history, it shows that you are a reliable business owner or a reliable business to do business with. Do you see the same thing or can you make the same recommendations?
Absolutely. I look at it in 2 different ways. One of the things that we often talk about, certainly with Jay Galt, is not only building the business, but what our eventual exit strategy is. And we could spend a long time into this, but the 2 that most often people think about is, well, I'm probably going to sell the business or sort of give it to the kids or, potentially just liquidate everything. We looked at the latest statistics, and over 72% of businesses that try and sell for retirement do not. And we have to think why. The value of that business is truly in the business owner. And one of the things that makes me so proud to work with small businesses is how passionate and how much they truly do care about their business, the quality and their word. But if they go to sell the business and they're not part of it, then all of a sudden, what is the value? Look, maybe a website, some past customers and, a couple of assets, a car or some bits of equipment. So there is no value in selling that business. Now take a step back. If I start to build value in my business and build a credit limit around the EIN, that alone is valuable. And if I start then to work on the business, not in the business, I'm really creating an asset to be able to sell. So that's one way I'd like to answer it. The second way I'd like to think about it is if you were going to buy a business, could it be similar then to maybe buying a used car? I wouldn't want to buy a car that wasn't brand new and didn't have some sort of vehicle history. Let's say a Carfax report. Now, if there is damages, if there's discrepancies, if there is missed maintenance, well, that's not going to be a valuable car. But if I'm looking at a business credit report and it's completely clean with access to every vendor and lender in America, that's one of the first things I'm going to check. So it's almost like the health check of a business. And by having a look at that, which is public knowledge, you're going to know, is that truly a healthy business? It's not just about the cash flows or the receivables or the assets. It actually is. We have to look at a whole picture. It still blows my mind today that these are public records and there's no hard or soft pull and anyone can see them, yet many people are buying businesses and don't ever check the business credit report, because you'll be surprised that how many maybe unpaid bills, discrepancies could be there that the business owner didn't even know about, and it's affecting the value of the business or the asset that they're buying. So that's an excellent question. Thank you.
I would only add one thing. We'll make it an Experian auto check report instead of that other one. Ours is better.
Yeah, absolutely. Hey, no arguments there at all. Absolutely. And funny story. Oh, well, I shouldn't say a funny story, but a true story to think about. Many businesses that I work with, it seems to be, like to be able to get bigger and bigger sort of, contracts if they're in the trade field. And there was a company that I was working with in the Northeast, and it was a commercial cleaning company, and they'd been around for a long time. But they found that they were losing contracts after a little while, and they couldn't understand why. Once we started working with them and looked at their business credit report, we realized that some of these bigger companies and some government contracts were actually checking their business credit report. And on paper, it didn't look like it was a company that knew how to manage themselves or pay their bills. By fixing their credit, although they didn't need credit immediately or need funding, but it started to allow them to get more and more contracts, and other companies could be compared to theirs, and theirs, by the end of us working with them, made it look like it. So the amount of bonuses that comes with understanding and building business credit, once again, it's certainly a subject that in our short time together, I'll do my best to do, but it's something we could talk about for hours. The short answer is there's no downside.
Wow. How can small businesses start from scratch? What are some different ideas of things that small business owners can start to invest in to build that profile?
Yeah, so as far as actually building the business credit score, once you've set up your foundation and once you're registered, I think the traditional way of looking at this is, I'm going to have to go and buy some supplies, or I'm going to have to go and, gas is, an easy sort of, popular one, or I'm going to have to go and buy equipment. And it's really not the case. There are many merchant services that accept credit card. And by choosing that particular merchant service, every time that you accept a payment from your customer, that gets reported to the business credit. So by you receiving money in, your credit score goes up. Some other secrets of the industry is payroll. That is an expense. We are paying payroll out. By having that reporting, then that's going out. So marketing services, is another way. So if I'm doing some sort of, advertising, if I can have that reported, that's a different way to be able to do it. So I think the initial thing is people feel like starting out a small business, I don't have a lot of expenses or paying outright. But when we start to go through and actually list the money that is being spent, or even payments being received, and I have that reported, that can dramatically change your business. And you would really be impressed at how quickly you can start getting access to that credit line and how quickly you'll build your business credit score when you know what you're doing.
Let's say I'm a business owner and I have to get supplies for whatever reason for my hair company. Basically, keeping an ongoing log of these expenses, and if you're buying it from the right vendors, you're able to report the expenses. There's a way to report the revenue that you generate.
You are, absolutely. So look, I'm a hairdresser, and I'm going out and I'm buying some brooms, and I'm buying some hairspray. I'm buying some heaven forbid, some toilet paper, some trash bags. Any of these, buying them from a vendor that reports, just making that transaction and being registered, they automatically report you've done your job. By taking a credit card for a payment for that haircut, for that color, for that cut, that is also now being reported. So it gets back to, it's not automatic. We just need to be a little intentional. But once it's intentional, every one of those transactions is going to report. So doing your day-to-day business is going to build your business credit. And that's the most important thing I think that you could take away from what you said. So exactly right.
That's awesome. So Drew, do you anticipate any upcoming trends or changes in the small business credit landscape that any business owners or prospective business owners should be aware of?
Yes. So I think, unfortunately, there is a lot of misinformation out there, when it comes to business credit and some sort of lending. And marketers and banks are very clever at doing that. I used to work for one of the world's largest. So let's take an example about this. If I'm having a conversation to someone and they say, "Oh, Drew, well, I don't need to build business credit because I already have it. I have a business credit card." 9 times out of 10, we're going to pull out that business credit card. It's going to be by a major provider and it's going to have the business name, but it's going to have their personal name on it. And they say, "See, Drew, I've got a business credit card." And the question back to them is, why does it have your personal name on it if it's a business credit card? And the truth of the matter is, it's really a personal credit card with the word business on it. They're paying 15 to 25 to, I don't know, 29%, annual percentage rate on that. They're personally guaranteed for all of those purchases on there and any debt incurred. And it's not reporting to the credit bureaus. So we're seeing that marketers, banks, vendors, and lenders are getting quite clever about putting the word business on it. Now, I know that there's banks out there that will put the Kansas City Chief on somebody's credit card. Just by applying for that card doesn't make you an owner of the Chiefs. But in that way, we have to be careful. A true corporate credit card will only have your business name on it. And when we think about that, it'll make sense. Another big change to the landscape is the difficulty of lending that we're seeing. I know one of the biggest names out there. I'm a fan of it. I'm not going to knock it in any way, but somebody going out and getting an SBA loan. It's almost like you have to go and hire a professional to fill out the application. Have you seen the stack of them? Less than 2% of them get approved, and then they still want your house, your cars, your 401k, and your kids. Now, I don't know, some of you might not be upset about that, but they're still wanting to take everything. So if the chance that you're going to get approved by one of these loans sounding good, it's easier, faster, once again, to get business credit. We're going to get comparable or less rates than those types of lending. I see 0% interest all the time on corporate credit. And I suppose, a third way to be able to do this as well is there are a lot of things being out there marketed as business loans and lending. But when you do look at the actual rates, they've put the name business on it, as again. So loans are getting harder to be able to get. People are charging more, interest rates are higher, and look, coming into the election year that we've got as well, people are starting to pull back and spend less. It's times like this. It's times like I mentioned, the natural disasters, the hurricanes, the recessions, the pandemics, where businesses are going to need a lifeline. It's not overnight. And there is no magic fix to it. It takes a little bit of time. So you want to give yourself at least a year to be able to get to the top and do it. And if you don't know how to do it and you don't know those vendors or lenders, that's something certainly at J-Gold, we can help with. We are experts in doing this. And I don't believe there's anybody else that offers anything similar to us or comes close to us that can take a business from the beginning of the top to be able to have that incredible Experian business credit report that you're going to be proud of.
Wonderful. Did I hear that you recommend a business credit line over an SBA loan or any sort of loan? You're basically saying your best bet is building business credit and utilizing that for not necessarily emergencies, but just that it will be a good backup plan for your business over trying to secure SBA funds. Is that what you're saying?
Absolutely. I truly do. Now, I'm not here to give professional advice or license to be able to give that for every individual listening. I don't know their own situation. So going and getting professional advice or coming to us at J Gold and looking at your individual situation would be the best way to get that. But generally speaking, any business credit that's linked to an EIN where your social security number is not involved is going to get you better terms, easier funds, and are going to allow your business not just to survive, but thrive. And as business owners today, we have to start moving away from that traditional piercing of the corporate veil and bootstrapping our business, because it clearly isn't working for a lot of businesses. And by us understanding that we have those rules at our disposal and understanding how that work, that's going to allow us to be able to do truly what we want, protect ourselves, protect our family, and also protect the community as well. If a local builder goes out of business, it's the electrician, the plumber, the carpenters, the roofers, and that starts to affect communities. And this is really what our mission is. We're trying to stop any business ever having to go out of business again when it comes to a lack of funding by understanding these simple and powerful rules.
Knowledge is power. I guess that's the cliche, but it's true. Understanding how to take advantage of the way the data is used and making sure that your business is protected.
Biggest comment that we get is, hey, where were you 2 or 5 or 10 years ago when I started
Yeah.
my company? The fact is we're here now and we're willing to help.
Yes, Drew. And I think I have one final question that kind of ties everything together. We haven't really touched on cash flow and actually making profit and just having a profitable income for your business. How does maintaining a healthy business credit profile contribute to a company's ability to actually secure consistent cash flow?
Yeah, that's a great question. I think as business owners, we all know that not every week or month is the same, and they can go up and down. And being able to access instant business credit already approved around your EIN with credit scores of 80 or above gives you the choice to where you want to get your money from. Maybe you've just got some account receivables coming in the next month, but the electricity bill needs to get paid. I really need to do payroll right now, and I need to order some materials for the next jobs that are coming in. It's in these crucial moments that having instant access to zero or low interest or credit lines or 0% on some business credit cards would allow a business owner to be able to borrow those funds, operate their business as normal and pay that back, and not getting these excruciatingly high rates or really being pulled through the ringer and having to put up all their personal assets to be able to do that. So cash flow is the lifeline, of course, of almost every business. The two challenges that I hear in any business is finding the right employees. It's not always something that I can personally help with, but as long as you can get access to funding when and if you need it. It's not about business credit. Hey, I don't need money today. It's if I ever need it, can I access it? And is it there? And I think that's one of the most important things when it comes to the day-to-day running of a business. But on a bigger level, opportunities come along every day, and business owners may not need business credit today, but if you had it, what could you do with it? Could you buy that extra truck? Could you buy another franchise? Could you purchase another company that maybe doesn't have business credit that needs to sell, all of a sudden? Can we 10x our business in the next, 5 years by having access to more funds? Can we put more money into marketing? Can we buy that piece of equipment that's going to increase our return on investment? So it gives us, most importantly, comfort. It gives us choice. And once again, it's really protecting, our personal assets and our family. And I think that that's the magic about business credit.
Beautifully explained.
Yeah, I think that, people don't know about business credit and business credit reporting
Correct.
and helping, especially small business owners, what we think was micro business owners, understand the importance of separating their personal credit from their business credit, because as Drew said, it protects them and their families, it protects their business, and it also helps them grow their business. I think that's something people need to know, and especially today with small business and the economy and the economic uncertainties we see, we need to be able to take care of our personal credit as well as our business credit. And I think Drew's advice and knowledge is right on the money. So thank you so much for joining us today.
Certainly.
Yeah,
Thank you so
it's
much.
been an absolute pleasure. And if anyone ever has any more questions for me in particular, you can find me on the socials at the Business Credit Guy or Jay Gelt. We'll be able to help. I wanted to thank you, Destiny, and of course you, Rod, as well, just for having me along today. It's a really important subject, and I just hope that we can get the word out there and help as many small businesses as possible.
I wish the same. Thank you so much, Drew.